The UK and global economy continue to face challenges as we recover from the pandemic. Both global and UK GDP increased in the third quarter of this year, although at a slower pace than projected in the August monetary policy report. Growth has been restrained by disruption in supply chains. Alongside the rapid pace at which global demand for goods has risen, this has led to supply bottlenecks in some sectors. There have also been signs of weaker UK consumer spending. While supply bottlenecks will continue to restrain growth somewhat in the near term, global and UK GDP are nonetheless expected to recover further from the effects of COVID-19. UK GDP is projected to get back to its 2019 Q4 level in the first quarter of next year.
And what the relatively recent.
So at this meeting, the committee concluded that the existing stance of monetary policy remained appropriate. The committee judges that provided the incoming data, particularly on the labour market, are broadly in line with the central projections in the November report. It will be necessary over coming months to increase bank rate in order to return CPI inflation sustainably to the 2% target. In observing the market implied path for bank rate, the committee notes that in the November report central projections, CPI inflation is projected to be below the 2% target at the end of the forecast period and would probably fall a little further beyond that point, given the margin of spare capacity that is expected to emerge. Looking beyond the coming months, the committee will, as always, continue to focus on the medium-term prospects for inflation.
We'll turn to your questions now. If you could just indicate basically your name and the...
This period of higher inflation is likely to be temporary, as depicted in the MPR. Moreover, monetary policy cannot tackle the causes of supply problems. But it is likely that for inflation to return to target in a time frame that should help to keep medium-term inflation expectations anchored will require bank rate to rise. That said, I would caution against views on the scale of an increase that would be likely to push inflation below target in future by increasing slack in the economy. The short-term evolution of the labour market will be crucial in determining the scale and pace of the response. We do not yet have the necessary hard evidence on the state of the labour market following the end of the furlough scheme to make a sufficiently clear assessment. Over coming months, that is likely to change. Thank you.
Global and British economy until the end of 2022. But is there anything about Brexit that could cause the UK to...
It's a feature of the committee, but we never attend.
It was a very close call. I don't think, we should... many of you wrote articles saying it's a close call, and I think it is a close call. We spent many hours, we always spend many hours, but we seem to spend even more many hours this time over it as we should. And we are we're in a situation where, the calls are close, they're quite hard, but, that's just a reflection of the position we're in.